Hi everyone. Today we're diving into a topic that's both timely and impactful: how the real estate market fluctuates during election years. Whether you're a buyer, a seller, or an investor, understanding these trends can help you make more informed decisions. So let's explore some of this key data and patterns, shall we? First, we have home sales and presidential elections. As you can see in this chart, home sales have increased after 9 out of the last 11 presidential elections. Each election year is represented in blue on this chart, while the year following the election is either in orange or green. The green arrows show an upward trend in sales following most elections. A couple of key points that we can take away from this chart is that historically, home sales often rise after elections, reflecting a period of increased consumer confidence and market stability. For example, after the 2004 and 2008 elections, we saw a significant uptick in home sales. There were only two exceptions in this 40-year span, in 1981 and 2009, where sales dipped due to economic conditions at the time. And we all know that 2009 was during the Great Recession. Let's move to our next chart, which looks at home prices and presidential elections. This chart reveals that home prices have increased after 7 of the last 8 elections. Just like with sales, the election year is represented in blue on this chart, and the year after is either in green or in orange. There's only one in orange. A couple of key points from this chart is that we can see a consistent rise in home prices following election years, with the sharpest increases after 2012, 2016, and 2020. The factors that go into these sales price increases are consumer confidence, interest rate declines, and a general economic outlook post-election that is typically positive. Now, let us look at mortgage rates during election years and how they lead up to elections. So the data in this chart indicates that mortgage rates have decreased in 8 out of the last 11 election years. This table specifically shows the percentage change from July to November of the election years. As we all know, lower mortgage rates during election years and during any year can make home purchases more affordable, thus spurring demand. For instance, in 2020, we saw a drop from 3.02% to 2.77%, and similar trends occurred in 2004 and 2012. As we know, after 2020, we also continued to see declines in interest rates all the way until 2022, when then suddenly we saw huge rate hikes and there was a huge halt in the real estate market. There have been some exceptions where interest rates have gone down, and that is the biggest election year that we saw that was in 1980, and we saw it in 2016 as well. So why does all this happen? In election years, buyers and sellers often hesitate, leading to a slight cooling off of the market. However, once the election is over, uncertainty diminishes and people feel more confident making significant financial decisions like buying a home. I will say that right now, buyers are definitely cooling off, but sellers are not. We are seeing a lot of homes added to the market right now, making it a great time for buyers to purchase a home because, as we know from these charts, prices are only going to go up post-election, and there's more supply on the market, thus there's more competition from sellers of buyers. So in conclusion, as we approach this election season with just 2 months to go, it's important to keep in mind these historical trends. Whether you're planning to buy or sell, just being aware of how elections have impacted the market in the past can help you make some strategic decisions. If you have any other questions about the real estate market or are looking to buy and sell, contact me at any time at 949-444-1601.